Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. We are lucky enough to have Mr. Greg Dickerson back for a fourth and very important video. How you doing, sir?
Doing great, Michael. How are you?
I'm doing great. One of the things I wanted to ask you about specifically, given our background with real estate over 40 years combined, maybe even 50 years combined, is where might the pain be, right? Because we are in an environment where the 30-year mortgage is up. It is broken 5%, which is a game changer. I think we both believe that first-time homebuyer homes are still very scarce. But I do believe, given interest rates, given a slowing economy, given all of the things going on, that there's some pain ahead in real estate. So I thought you and I could point at a couple of places where we might uncover some pain. So either A, people can get prepared, or B, maybe avoid some pain. What do you think?
Yeah, absolutely. Let's do it.
All right. So you were a builder of, I'll call, luxury oceanfront property back in the last real estate boom, in an environment where I think you have said a couple of times you thought prices were only going to go up, and that didn't happen, as I recall.
Yeah, they were. They ain't making any more, right? So there's
Yeah.
only so much coastal property, oceanfront property. There's only so much land, other than, like somebody said, you can't make any more land. You can. There's what's called land reclamation. You can create islands, and you can create land. And that's been done over and over. But at the end of the day, bottom line, in oceanfront property, things like that, there's pretty much only so much of it. And prices were going up, but interest rates were going down. Credit was easy, money was easy. All those things. Somewhat similar in terms of what we've seen recently with low interest rates. Affordability and access has been much easier,
wide open.
But generally, where you see the first signs of housing corrections are in the high-end second homes, investment properties, luxury home market, in those coastal areas, mountainous areas. And then you'll see it in the home builders next, because they're contracting with buyers that are 6 months to a year out from completion. So as rates go up, you'll see those contracts fall out, and you'll see builders, they'll liquidate, they'll just drop their prices and get rid of that inventory. So those are the first two areas you generally see it.
Yeah, let's talk about the first one, just make sure people catch it. Because again, a lot of people watching this may think about, that luxury stuff and think that these are the well-heeled millionaires, playing Monopoly, if you will. But in reality, these folks have the same kind of cash flow constraints and crunches and get just as fearful. And to them, it is a luxury that they don't need, right? So if these individuals get scared, they don't mind selling. And, frankly, I've known them, they don't mind selling at a loss just to rebuild capital quickly. Is that fair to say, that number one?
Oh, absolutely. And really the first place to watch it, I don't even know where it is now, but where do you buy used Rolexes and Lamborghinis and Ferraris? Because those go up for sale first.
Yes.
And then the beach house goes. But that's, that's
what exactly. Yeah.
When the economy is contracting and when the wealthy people are losing their money, those are the things you see. The jets go, the cars go, the watches go, then the beach house.
Yeah. So I agree with that. Again, these all take time. A lot of people hear us talk about this and they're like, oh, can I buy one today? No, all this takes time. Every family makes their own choices. This happens over quarters, if not years. And then the next one is builders. I want to talk about builders a little more nuanced, given your background. I see, I'll just call it three different types of builders, because I'm not sure how else to phrase it. There's the people that maybe it's KB Homes. They focus on first-time home buyers. Then there's maybe Lennar and Pulte, which is kind of the move-up buyer. And then there's the luxury buyers, or the luxury builders, excuse me. I'm going to guess that those three builders don't react the same way. Is one hurt more or less than the others, or might react first?
Yeah, I mean, probably your first-time home buyers are going to feel the pinch first and the biggest with interest rate hikes, going as fast as they've gone. As you start to get higher up, a couple $100 or $500 a month in a payment isn't going to affect somebody who's making $300,000 to $1 million a year or more. And then at those levels, you get a lot of cash buyers too. So with the limited amount of inventory, here's the interesting thing that we have now that we did not have back 08, 09. Obviously, very different credit environment, very different borrower profile. The mortgages are much healthier in general overall, the mortgage market. So that was a banking crisis where the mortgage market was flawed, 08, 09. And the inventory level is way different this time. I mean, we had a lot of inventory back then, and it was taken, even in a hot market, was still taking 4 to 6 months to sell a house, even when the market was red hot back then, because there was a lot of inventory out there. Right now, there is zero inventory. The other biggest component that we have now that we did not have back then in every area of the market were investment buyers.
Yes.
So the short-term rental market wasn't a mean, thing like it is now. Everybody's into short-term rentals, and that's a whole thing now that wasn't even there, back when I was doing it, because Airbnb was just getting, actually Airbnb wasn't even around.
VRBO, I think. Yeah.
We had VRBO, but not
Yep.
Airbnb.
Correct.
So Airbnb's really revolutionized the investment model of short-term rentals, especially with arbitrage and all that, or the leasing model.
Yep.
And then the institutional investment buyers. So back then they were buying mortgages, not the properties. And then once that dried up, they said, wait a minute, why are we buying the mortgages? Let's own the real estate. So they started buying those. And then you have the individual mom and pops that are investing more in investment properties now than they were back then. So again, that's 30% of the market are investment owners. The institutionals less than 1 or 2% of that, but average individuals own a lot of that. So they're so for home builders that are having trouble selling, they've still got an easy exit with institutional buyers in the right markets that these buyers are looking for, that will pay a premium. At very least will pay their costs. So builders are in a different position now than they were back then, but they will still cut inventory, to get those houses off their books, because the only way they make money is to keep turning. They have to keep turning out houses in order to make money and turn a profit and keep people employed. Actually, they don't even care if they're profitable. They want to stay employed, because a lot of these public companies, that's what they're doing. They're just rolling cash flow. Yep. They're making their money on the financing and all the other residual components, especially with the prices, the way they're escalating right now. It's very difficult to make a profit as a builder, on the actual building.
Yeah, it's really, I could not imagine being a builder to me is always hard, right? It's like a choreographed dance, right? You're managing money. There's cost of capital, there's carrying costs, then there's employees, and then there's different tradespeople and licensing and inspections. Then you throw in out of nowhere these supply chain snafus. Dead days are exploding, right? I read a crazy thing the other day. Again, you're a builder, I am not. But I read that some kind of I-beam, some 40-foot I-beams are out of stock for 4 months. So builders now are pulling two-story plans because they don't have these, whatever this I-beam is.
Oh yeah, I-joist, yeah.
Yeah, I-joist, thank you.
DJIs, yeah. So
it's
there's other alternatives there. That's a very, but yeah, building components, trusses, whether they're open web floor joists, whether they're roof trusses, whether they're TJIs, but you can just go back to conventional dimensional framing lumber and fill the gap, but it's a little bit more expensive. You can't span as far. So there's limitations, to what you can do with it, where you got to get creative in terms of putting, structural support columns in or things like that to span. But yeah, it's just appliances, trying to get
windows, shingles, and it's crazy.
A lot of that started after 2008 and 9. After the 2008 and 9 crash, a lot of like HVAC manufacturers, they weren't carrying inventory anymore.
Yeah.
You had to order stuff, and there was a lead time on it because of the contraction in the housing market. A lot of people left the trades; they haven't come back in.
Yeah.
So you don't have the labor force to be able to turn the product out. So it's probably the most difficult time in the history of building right now to be a builder, because of all of the things that are happening from a supply chain and a labor market standpoint.
Yeah. The last thing I want to talk about pain is really a question. One of the things that I visualize, and again, I fully admit I could be entirely wrong about this one. I think the Airbnb VRBO space has gotten sexy, which to me means all these new investors come in and they're doing this arbitrage, and they're doing all these things, and they're not doing it on what I'll call class A, like destination places. They're doing it on class C homes. And that might work in a pandemic where people can't go anywhere. But in an environment of a recession, we just saw the 1%. I think I got the number, like 56% of people are cutting back on travel. I don't know how this ends. It almost seems like supply demand has got out of whack, and there's more supply than demand. I think some people are going to get hurt there, but maybe I'm wrong.
Yeah, you'll see some contraction in that market just with the world opening up, especially this year. People are traveling internationally again, where they weren't for the last 2 years. So people want to get out of the country. They want to get out of their area and go explore. So worldwide, there's still a lot of demand, and Airbnb and VRBO housing, as a rental has become more popular than hotel rooms, just because of the flexibility of it and things like that. I still personally don't use them. When I travel, I like to use hotels because I want it all taken care of. I don't have to.
Yeah, I don't
all
want to do
that
any of that. Yeah, me too.
stuff.
I'm a hotel guy. Yeah, it's like I'm out. Yeah.
Yeah, unless you go to the beach or something, then you stay in a house. But yeah, I just haven't transitioned yet. I'd rather just stay in a luxury hotel. Everything's there. You call room service, it's done. You don't have to worry about it. When I'm on vacation, man, I want to relax.
Yeah, I want to be on vacation.
And
Exactly.
I go to resorts a lot too. So although I guess when last time I went to Greece, we stayed. It was a hotel resort property, but it was basically a house that they had converted. So it was nice, but again, the amenities were built in and everything was taken care of. So that's how I like to travel. But
Yeah,
I'm not, not everybody's like that. So anyways, long story short, yes, there's a lot of people entering the market. A lot of them are doing properties in areas that you probably shouldn't be doing it. There's not real demand drivers, and they're just
not long-term drivers.
Yeah, doing whatever. But people want to get out and they want to get about. I mean, there's cabin fever with the pandemic for the last couple of years. So people are still taking their trips, they're taking their vacations. And that's the thing that always sits with me. In 2008 and 9, the worst financial crisis we've ever seen, banking collapsed, people were losing their jobs, companies were laying off, people still took their vacation. So especially down in that beach, because it was a cheap, drivable destination, where people could get to it. It was an inexpensive way to stay. They could bring their food, and you could put 3 or 4 families, or a large family into a beach house, and, it didn't cost you that much. So those types of destinations are still going to be popular, even when the economy is contracting. But these little odd, different things are the ones that will kind of contract a little bit and suffer, if the traveler, changes and inflation's such a problem where people can't even take a vacation. That we didn't have that back then.
Yeah.
We didn't have an inflationary environment. We just had,
that's the
everything
difference.
else was going down.
Yeah, inflation is the game changer, because now that discretionary income, which you may have had to take that trip, you don't have anymore. Gas is up. I mean, again, CBS poll I talked about in the daily financial news this morning, 62% of people are consciously driving less because gas is so high. So again, I think the inflation is the game changer. Discretionary income, not there for a lot of people. Greg, where can people find you?
Yeah, GregDickerson.com, YouTube channel, podcast. It's all there. Go check it out.
Thanks, buddy. I appreciate it.